There are some really, really cool things happening around us right now, which is setting up the stage for really explosive Zip growth. First, we talk about installments. We were pounding the pavement 8 years ago, trying to drive awareness. There isn't a day now that you can't pick up the newspaper and read about buy now, pay later and installments. Every merchant wants to offer it, and every bank is scared of it. The market's expecting buy now, pay later to reach $1 trillion in the next 4 years, which is growing more than 3 times from where we are today. The pandemic has also accelerated e-commerce, some say more than 5 years, a trend that we believe is here to stay, meeting the needs of customers, driving convenience. And with inconsistent vaccination rates globally and new variants, the flight to online is absolutely here. I mean, if you look at the data in the UK, for example, you look at fashion retail, more than 50% is now spent online. In the US, they're expecting 20% of retail to be online. And this has been an amazing tailwind for buy now, pay later, where in more mature markets like Australia and the Nordics, about 20% of e-commerce is running through buy now, pay later rails. Debit is taking over credit. Debit has arguably fueled the buy now, pay later revolution, where customers attach a debit card and pay back with their own money. In Australia in 2019, debit purchases overtook credit purchases. And in markets like Mexico and the Philippines, only 10% of the adult population has access to credit cards, but over 80% have access to debit cards. And then finally, the amount of investment that is now going into payment rails for merchants, but also new payment rails such as UPI and fast payments in India, open banking, or even new exciting protocols like decentralized finance and DeFi, which are removing the middleman, the financial institution, and allowing customers, or even customers and merchants to now connect at a much, much lower cost. For fintech, and in particular buy now, pay later, there has never been a more exciting time. And we believe this is a once in a lifetime opportunity. And Zip is incredibly well placed to take the ride of this big wave. We arguably got here just in the nick of time. We are now global. We have a footprint that matches our rivals and exceeds many too. We also have teams that are in local markets that can adapt, they can fight the competition and really localize what we do and how we offer. We've also got a scalable global technology platform that's able to roll out products and services with engineers globally working on the same platform to drive issuing, acquiring, whether it's QR, virtual card, and a range of other exciting products as we've seen today. And the credit experience that we've proven over 8 years means we can balance the risk and reward as this tide rises. Now, when we look at growth, there are really 3 levers. We've got the consumer and the merchant, which is our two-sided ecosystem, and we've got the global strategy. For consumers, we have to continue to drive acquisition, where 2/3 in the US comes from merchants. We also have to drive engagement so that we do become that preferred payment type. And we saw an incredibly exciting roadmap that we are starting to roll out, all centered around driving payment preference. And for merchants, we're offering new things like demand gen, working capital, so that they stay in our network and they continue to be advocates for us. Now let's move to global. We are a growth company since day one. Now, as we invest for growth, we have been very careful in how we allocate our capital and where we invest depending on the maturity curve. I'm going to talk about very quickly 3 different approaches. Approach number 1, what we call the near term, is where we enter regions, points of presence, with a small investment. It's either an acquisition or an acqui-hire of key talent, key founders. And we start to get to know the market, the licensing, and make sure that we can build a robust, sustainable business. Then, as we move to the second phase, we start to invest more capital, enriching the product and platform, providing new services to our customers and merchants. And then we can expand regionally for a very light incremental OPEX cost. And a perfect example is the US, where we came in, acquired QuadPay, and we've now moved into Canada and Mexico on the exact same platform with a much lower operating cost basis. And then we move to the more mature phase, where underpinned by strong unit economics, we start to drive volume, that drives operating leverage, and that drives enterprise value, and where we also offer new products to our customers and merchants. And Australia is a perfect example there, which Pete will talk about shortly. Now, 2 years ago, I fondly remember we were sitting in the Commodore, which is the Zip boardroom in Sydney HQ, with Pete, Tommy, and myself. We saw this phenomena that was happening here and realized this was global. And we said, we've got to go global, and we've got to go global now. The question was the how. We spoke to Tommy Mermelstein, our Chief Strategy Officer, who has been the chief architect behind the how we've gone global. He's been the rainmaker and deal maker, doing all the corporate development, which has truly been incredible in what you've seen in the last 2 years. And I'd like to hand over to Tommy to take us through that experience.
Thanks, Larry. I'm Tommy. I'm the Chief Strategy Officer here at Zip, and I've been privileged to be driving much of the market expansion activities. As Larry noted, 3 years ago, we identified the growth in buy now, pay later that we saw here in Australia is truly a global phenomenon. And in particular, the concept of simple, interest-free installments that are easy to sign up to, live at the checkout, are repaid in weeks or months, not years, is the type of credit proposition customers are after, and that is globally applicable. By leveraging technology, a different approach to credit underwriting, partnering with merchants, we've been able to offer a fundamentally different credit proposition. It's leapfrogging credit cards in markets like Australia, and will be the way people pay in the future in new and emerging markets in markets like Mexico. But that's the why. Just as important is the how. If you compare us to our global peers, you'll see our approach to global expansion is very different. But we always needed a smart approach. We needed a capital light model, and one that ensures that we have the flexibility to adjust in a highly dynamic environment. We needed the ingredients to succeed, and we needed that flexibility, which is why we have 3 ways of entering new markets. The first is greenfield. You've seen it in the UK, Canada, Mexico, and Singapore towards the end of this year. It's a low-cost entry model, and we often focus on markets that are adjacent to our core markets, where there's lots of cross-border trade, global merchants that are looking to take us into those markets. And we have significant traction in those markets through those flywheel partners. But we always must have that local presence, the boots on the grounds, and that coalition of founder mentality. Next, we move on to the minority investment bucket. We're focused on new regions, but we want to learn about those regions. We have to understand the dynamics in those markets. And we look for businesses and teams that are aligned to our culture and are in the cusp of global scaling and have the same synergies with Zip, and that we can deliver real value. We typically start with a minority investment, but we try to negotiate special rights and immediately integrate them into our single merchant interface so we can introduce them to our global merchant base. But we also have the plan through those minority investments to plan day one, to think about a path to control. Our day one looks very different when you've known a business for years. Take Payflex, for example. We've had a relationship with Paul, the founder of that business, for over 3 years. So when we think about integrating that business into the global, we actually know how to do that, and our planning is fundamentally different. And it's important to also know, how does that evolve when we start to consolidate these assets and we go into full acquisitions? We have demonstrated we have the playbook. Take the US, for example. QuadPay today accounts for more than 50% of our global business. That business has grown over 150% across all key metrics: customers, revenue, TTV. Firstly, global helps us win in our core markets. It's our global proposition that is resonating with retailers in the US, in the UK. Buy now, pay later is a large and global opportunity in both developed and emerging markets. So we're making investments today for the future. And we see ourselves creating significant shareholder value in the medium to longer term through these global expansion activities. In emerging markets like Mexico, the need and the difficulty in accessing credit is even more prevalent. Products that you can sign up to through a smartphone and access at retailer checkouts is the future. You can see through the map that we've been very thoughtful on how we continue to expand our regional footprint, starting with regional hubs that can fan out further. We have gained access to key growth markets. Take the EU. We've started with the Twisto transaction and now are in the process of porting their licensing into additional markets. In the Middle East, Spotii. Huge opportunity, and one we've launched with Shein globally. There's a lot of more growth there and some exciting retail partners we expect to launch soon as well. And then Southeast Asia, another huge growth market. Payments is growing, digitization of payments, and the wallet wars continue. But we see huge opportunities in that market as rapid penetration continues, and we'll be live with Singapore before the end of the year. So we have fine-tuned the new markets playbook. We're opposed to grow quickly or in these regions, and importantly, the model is capital light, where we're making thoughtful and strategic investments, and it's the combination of organic and inorganic that is the Zip secret sauce. It's the coalition of founders that are building in these markets which will help us differentiate and win in the years to come. It's the founders that think about that incremental transaction, delighting that customer at checkout, and building true partnerships with our retailers. And now I'll segue back to Larry to talk more about the US.
Thank you, Dr. Tommy. And one of those priority regions is, of course, the US. It's our biggest focus right now, and it's a big reason that I'm actually here right now in New York with Adam and Brad. On any measure, this market is the biggest. There's over $5 trillion in retail sales. There's an e-commerce market that's going to be hitting $1 trillion in the next couple of years. And it's a market where the 6 largest credit card issuers, the Chases, the Citis of the world, are no longer creating products and services that meet the needs of the next generation. And this is exactly where Zip can play a role, to be that issuer for the next generation who are going to become some of the largest shoppers and financial customers over the next 10 years. We don't believe this is a winner takes all. We believe there is enough here for us to build a very, very sizable business. And we also believe that we have the ability to win. The guys have done an incredible job at getting the business to this point. If you look at our unique character traits here, our customers have shopped at over 400,000 retailers using our virtual card technology. That's 400,000 merchants that we can start a new commercial relationship with. We've also got an app that is one of the most engaged buy now, pay later apps over here, where the top 10% of customers are transacting over 35 times a year, a super engaged app. And as we add more merchants, more customers into that app, we start to see that flywheel evolve. And the other unique piece is that our ability to charge, to generate income, both from merchants and also customers through fair, transparent fees, allows us to go where others can't, into new verticals and new platforms, and play in any gross profit category. This is proving to be really, really important. I've joined the team. We've been meeting merchants, and I can tell you now that we've got access to some of the biggest merchants here. And by leading with product and technology first, by putting merchants at the center, we believe we can really activate a lot of the exciting pipeline. And really, this is the most exciting slide for me. So we delivered $5.8 billion in TTV in the last 12 months. And if you look at it, Australia, which is probably the most mature, we're at about a 1% market share. Many of the other markets are 0.1, very, very small. If you take the forecast that WorldPay and others are suggesting, which is $1 trillion by 2025, we estimate that our addressable share is about 800. And if we can maintain a similar market share, anywhere from say 0.5 to 1%, we can generate anywhere from $40 to $80 billion in annual TTV, which is between 7 and 14x where we are today. So this is why for us, we are incredibly excited. We're only just getting started. And I think what investors and you guys need to realize is that even though we're 8 years in, as you can see here, it's just beginning.